Please help me in welcoming on stage our moderator, Mr. Himanshu Chandra, co-founder, Progcap. Very warm welcome to you, sir. I would now like to invite our esteemed speakers on stage. Please help me in welcoming and let's have a huge round of applause for Mr. Rajnish Kumar, Chairman, Mastercard India. So very warm welcome to you. And help me in welcoming Mr. Ashish Agrawal, Managing Director, Peak 15 Partners. Very warm welcome, sir. Over to you, sir.
Hey, thank you everyone for joining us today. And I know it's around lunchtime and things can get tough to keep everyone interested, but we have a very interesting panel here and we hope to keep you excited about this. So now we have seen Indian ecosystem evolve over the last decade. We have seen UPI and digital infrastructure truly transform the way we conduct our financial services. As per some estimates, more than almost half the digital transactions globally happen on the UPI ecosystem. And because of this data that gets generated, we are seeing lending institutions underwrite credit much faster. We are seeing instant credit options coming in. As per some reports, 60% of mobile phones and televisions that are being sold in credit. But there are still lots of spaces, such as MSME financing, where 90% and above MSMEs don't have access to credit. So today we want to discuss around how financial innovation can be more inclusive and can it be becoming safer. To discuss this, we have two of the most amazing panelists. We have Mr. Rajnish Kumar, who has, I don't think I need to introduce him, but I'll try my best. 4 decades with SBI, transformed the institution before finally leaving as a chairman there. And since then, he has been chairman of Mastercard, chairman of Bharat Pay, and has been on the board of many large institutions and as an advisor as well. Thank you, sir, for joining us today. We have also Ashish Agrawal, one of the brightest minds, at least someone I have known personally for the last 5 years. Some of the sharpest, one of the brightest minds from the industry, is managing partner at Peak 15, leads their investments in financial services, technology as well as consumer internet. He sits on boards of companies like Progcap, I Global, and many others. Ashish was an entrepreneur before this. He built a mobile app for transportation. He was an engagement partner. He was with McKinsey as an engagement partner as well. So before taking too much time, I would love to start with my first question. You have seen the financial ecosystem at close quarters for the last 4 decades. You have seen its evolution, the way banking has been transformed, and you have also seen the emergence of fintech. How do you see the two interacting with each other and leading to a more inclusive ecosystem?
Yeah, as rightly said, I started my career with the State Bank of India way back in 1980. And we had technology, but that was mostly for back office and reconciliation. And at that time, the way you send money, so either you buy a draft or you buy a postal order from post office, and it would take 15 days, 20 days. In fact, the maximum area of complaint for banks was around money collection. So what a change, I would say, in the last 4 years. 44 years, not 54. I'm not that old. So 44 years, amazing change. And the change in the last 10 years, that has been phenomenal. Even at the beginning of the century, it was not like this. Reserve Bank of India had introduced many enablers like NEFT, RTGS, everything. All this came in the first decade of the current century, and that was enabled by what we call core banking system. The banks started with Bankmaster standalone systems. And when after the economy was opened, reforms happened, new generation private sector banks came in. They had no baggage like many other Indian banks. And then the old institutions like State Bank or many other public sector banks, they all did the catching up and put the core banking system in place. Once that was done, then things started becoming very easy when it comes to payment. And as I said, RBI has played a very critical role, and they introduced NAV, RTGS, then came NPC and UPI, which is part of what you call digital public-private partnership. That has changed completely the scenario for India, and it is now a well-recognized fact that India is on the top of the table when it comes to digital. So this change, I have seen, you have not seen. Because you have not seen the manual system. How it was done, what was the problem of reconciliation, what was the problem of... But frauds were not as many, let me tell you, at that time. System was slow, obviously inefficient, but not as many frauds as what happens today in the digital ecosystem. So it's a complete transformation. And further developments, they are happening, innovations are happening. And the contribution to the growth of the economy, that is huge. As a result of the innovations which has been carried out in the banking and financial sector, and everybody is benefiting. It was unthinkable that you would have 530 million, 53 crore general account. Just opened, like in first year 2014, when Honorable Prime Minister gave the call to the bankers and they rose to the occasion, 350 million accounts were opened. In the next 10 years, another 180 million accounts have been added. And what it does, that I was chairman of State Bank of India when COVID happened, and a scheme, Prime Minister announced a scheme, that 500 rupees will go to women's accounts. And they were 120 million, 12. 503 months, that kind of capability which India's banking system has created. It's an achievement which as a country we should be very proud of. And this is how the lives of the people, the banks have been able to bring a positive change. Branch network, alone opening of the branches could not have brought this change. Imagine if we were doing everything manually. Even today, how will you serve these many customers? Impossible.
Incredible, sir. So you almost gave a brief history of Indian banking. And you spoke a lot about regulatory framework that has changed. And Ashish, maybe a question to you then. You have seen in the last 10 years Aadhaar, UPI, GST, and a host of many other changes coming up. And you have been investing in companies that have been beneficiary of these changes. Could you talk us through about what you have seen?
No, thank you for the question, Himanshu, and for having us this panel. So I was reflecting, 5 years ago we had published an article where we talked about a confluence of tailwinds that were coming together for the fintech sector, and argued for that those tailwinds would propel the sector forward. And we talked about things like UPI, which made payments faster, Aadhaar, which made KYC easier, and of course the ubiquitous penetration of internet, which was enabled by Geo and smartphones. I think we believed in the direction of change. I would say the velocity of change has even surprised us. We have, on that thesis, we have invested in over 20 companies over the last 6 years. Some of these companies have taken the industry by storm. We led the Series A round, for instance, in a company called Grow, which is in the wealth management and the brokerage space. In a little over 5.5 years, that company has gone from starting up its operations to become the leading player in both retail stock brokerage and mutual fund distribution. We have similarly, investors in several payments companies, including companies on online and offline payments, Razorpay, Pine Labs, BharatPay, where Rajnish is also involved. And all these companies have been significant beneficiaries of the regulatory-led tailwinds and the proliferation of digital payments that has happened in the country. maybe one other area which is not as well talked about in the from a regulatory tailwind standpoint is GST. Over the last 5-6 years, GST has really been rolled out, and that has formalized supply chains in the country. Of course, Himanshu, you will be best placed to talk about the changes that are happening as a consequence of that. But the access to credit that is getting enabled for retailers and small distributors is wonderful to see. I conclude by saying, look, I think all these companies and founders have stood on the shoulders of giants. Folks like Rajnish sir, who have created, the core banking system existed for these companies to be able to build the next layer on top. NPCI created the payment rail for these companies to build the layer on top. So they've stood on the shoulder of giants, and I think the regulator has made it conducive for India to now be what I would argue as the most attractive fintech ecosystem in the world.
No, Ashish, absolutely. In fact, I remember when we were starting Progcap, it was the backdrop of DMON, GST. And around 2018, we would go to villages in Maharashtra, and we would not believe anyone would have a registration proof. But every shop had this beautifully printed, laminated GST paper and on the storefront of the shop, So we saw this transformation up close, and our business relies on GST data in the ERPs of distributors and corporates, on whom we can then rely on and give the data to the banks so that they can underwrite credit better. And it has been transformative. If this wasn't there, it would have been very difficult for us to trust the data and build credit on top of that. And maybe since we relied mostly on banking partners to lend for us, as a fintech, our job was to reach out to underserved customers and then give options to larger balance sheets to lend. So maybe we can, from your perspective, how do you think fintechs and banks can collaborate more? What should be the modus operandi of the partnership?
So, again, I have to draw a lot from my experience in State Bank of India. And this I am talking in the context of not only fintechs and the startups. Take it to. So State Bank as a policy, we decided to do 3 things. One was investment in fintechs. Second was procurement from fintechs without going through the tedious tender process of a large organization like State Bank of India. Of course, there was a limit that if the amount is up to 3 crore, I don't know whether it has been raised or not. Then we like the product, we will buy it without on nomination basis, which is for a public sector organization like State Bank is a very bold step. Even if it may sound 3 crore rupees is a small amount, but taking that kind of call that we will not invite tenders and we will do it on a nomination basis. And third is the partnership model, where State Bank and many companies it partnered with for various needs, whether it was for loan origination or KYC. So our country, we have to understand, it's a very large country and large. So I always say that there is no competition. No competition in the sense that the market is so big that there is a place for everyone. But you have to find a product or service which is useful to the people and they buy. The fintechs, the advantage has been that they've been able to think innovatively and roll out products very fast. The same kind of innovation if a legacy organization does, it takes a lot of time. So there is a lot of complementarity. Fintech and banks, they are not competitors at all. Let's be very clear. Sometimes there's always talk that fintechs are competitor to banks. I don't believe in that. Fintechs and banks, they complement each other very nicely. Banks need last mile connectivity. Banks need faster innovation. So if you have applied your brain and you have innovated, so it's not necessary that I have also applied my mind and do the same thing. I can do something differently. Second thing is, you will never be able to mobilize money. Only banks will be able to mobilize money. So if you have to lend, who will provide the liability? The bank will provide the liability. Now the question is that Why do I need, as a bank, to partner with you to lend? And at least in the current scenario, it may change over a period of time. Lending to small businesses, small people, that is a core strength of fintechs, because of many reasons, and it will take like another half an hour if I go into the reasons, but without going into the reasons, this partnership can work very well, where like Bharat Pay, which I chair the board again. So we acquire merchants, which is a loss-making business. Nobody has made money in merchant acquiring business. Nobody does that. But through other products, cross-sell and cross-selling of loans, where Bharat Pay has mastered that art, that how to lend to these merchants. And they are all tier 2, tier 3, tier 4, tier 5 merchants. There is no security, but I have read always in RBI there are very clear securities that we should not have a security-oriented approach. So sometimes I wanted to amuse you also that the regulator itself says that security-oriented approach does not work that well. But there is also a huge debate about unsecured loans, that they are not safe. But I believe that in credit, if you can control the cash flow and you have the idea about the credit worthiness of the borrower, these two things coupled with the tools and capability which today is available by way of data analytics to determine and predict the behavior of a borrower, then you don't need fallback, at least for smaller loans like collateral security. So this unsecured, secured, this debate, particularly for smaller loans, in my view, it is a little bit of a superficial way. And collateral security realization, recovery of money, it will be what you call loss given default. There may be some difference, but what your focus has to be PD, probability of default. So if you tackle probability of default, so that you don't have to rely on collateral, so that is where fintechs are doing fantastic job, and banks should follow.
And very fair points. And in fact, we ourselves, for the first 4 years of our journey, were just collaborating with banks. We did not have an NBFC license. We were a platform, did almost 10,000 crores of disbursals using this platform approach. And as the regulations changed, and when this requirement came that you must be an NBFC to partner and give security, we shifted to a co-lending approach, which has also done very well. There was some friction initially, but then I think technology came in, stepped in and helped us collaborate better. And sir, to the point on regulation, how do you think should startups and larger organizations collaborate so that there is a good mix of innovation as well as regulation?
So one is again same thing like competition and collaboration. It is similarly regulation and innovation. They are not on the opposite side; they are on the same side. Why do you need regulation or rules of law? So that the markets, the banking system, it works in an orderly fashion, because all of us know that if a bank goes down under, what happens to the financial system. So protecting that financial system, that is the primary responsibility of the regulator. So innovate for sure, but the regulatory boundaries you can't breach. That is very clear. And what are broad level concerns of the regulator? I am talking in the context of Reserve Bank of India and the fintechs and the banking system. KYC and AML, anti-money laundering. So this is a concern, nobody can argue that we will not follow this. Customer disclosures, to treat the customers fairly. So if the regulator asks that you have to treat your customers fairly, so is it an ask which anybody can challenge or say, no, we don't want to treat our customers fairly. So treating the customers fairly. And that comes through in your approach, in your the disclosures, with whom you are dealing. You should understand what are So no fine prints, honesty, transparency. So if you see whatever RBI circulars have come, they have come around these two things. And third is about systematic risk developing in the system, where RBI has those tools about increasing the risk weights on a particular lending, like they increased it for non-banking finance companies. They said that risk weight, because RBI was seeing that some risk is building in the system. So there is a macro level. So no regulation, nothing says that you don't innovate. Innovation does not mean bypassing the law. So Indians, we are like, we are very innovative people and like to bypass the law. But in the banking system, in the financial system, there has to be and will always be a zero tolerance approach if we have to have a safe and sound banking and financial system. So this is not either or, they have to go hand in hand.
And as you rightly pointed out, sir, there's been so much done by the regulator in creating this framework, but regulation needs to be followed so that we can have a same banking ecosystem. And Ashish, as an investor, investing in new technologies, new innovation, what would be your wish list from the regulator of the changes that can happen?
No, look, first of all, you should recognize that the regulators in India have straddled this kind of fine line of providing the right push for the growth of the ecosystem while preserving the stability of the ecosystem, as Rajnish was pointing out. So I think we should have gratitude and feel thankful to what the regulators in India have provided us. There's always an aspiration for more, as I'm sure is the case with many fintech entrepreneurs present here. I guess the wish list I would bucket it into two categories. I think there is a set of licenses that are today either too hard to get or are not granted by the regulator to younger companies. And now that we have seen the examples of many companies in other categories, be it in payments, be it in in investing, be it in new banking and so on. I think perhaps the regulator can draw comfort from the fact that when these companies are given licenses and a democratization of players happens, then that leads to dramatic increase in inclusion. Right? When you allow for more people to enter, then financial inclusion gets pushed. So things like banking licenses itself, credit card licenses, if you talk about the insurance, GI licenses, life insurance licenses, some of them there is a stated object that are available, but the process sometimes is extremely cumbersome for a young company to go and pursue them. Sometimes they are not available. So I think same is the case if you were to talk about capital markets. We are in a situation where capital markets are, there are literally two exchanges, of which one is the dominant exchange. So there's, if you look through the rest of the stack, be it the RTAs, it's just two players. Then if you look at the CDSL and SDL, it's just two players. So it's very few players that are managing the entire capital markets infrastructure of the country. I think it is helpful for new players to enter and play a role in the capital markets infrastructure as well. Perhaps the regulator would want to open up some of these sectors for new players to enter. So I think I would, so there's one bucket of licenses where I think there's areas where licenses are either hard to get or not available, which perhaps the regulator can consider being more open about them. The second, I think, I agree with the regulator that one has to follow the law in its entirety, and I think lots of fintech companies have made the mistake of traversing in the gray zone, or if I may, suggest the shoulder on the road, driving on the shoulder on the road and hoping to cut back into the main, lanes. And I think that has not been seen well by the regulator, and rightly so. I would also say, though, it does create a very difficult environment for fintech founders if they are, at the fear of a new and a sudden regulatory change that could come out, which could disturb their business materially. So I think perhaps the regulators may also want to think about how changes to regulation can be communicated, appropriate time can be given for companies I'm sure they already think about that, but we need to create an environment where it's stability of the business is protected and it's a conducive environment for young companies to create businesses in. So that's the other more tactical suggestion I would have, or a wish list I would have for fintech regulation.
Perfect. So it's about licenses and then stability of the regulation. And once that happens, and maybe a question to you, Rajnish sir, is about if that happens, will that attract more FDI into the system? Because we surely need external capital to grow the financial ecosystem in India.
Yeah, India needs FDI. That's a requirement. We need capital, and which attracts capital, which can give the desired return to the investor. Whether it is Indian capital, foreign capital, they are very clear in their mind that we need the set IRR or return on our capital. So to make the sector attractive, we have to take steps that whatever decisions are taken, it would impact the profitability of companies. So in payments currently, for making it popular like UPI, obviously there is the charges are nil. You create an ecosystem, you invest in technology, but how do you make money if you can't charge? The user fee has to be there. And sometimes for promoting a system, there may be a period when it is free. But ultimately, any business should be viable on its own. So if you are in payments, without depending on anything else, your payment system should be viable. And to make money from cross-sell, like say, you can make money from merchants through lending, this cross-subsidization approach or this thing, it doesn't help in the long. So anyone who is investing, who is looking at you, that how profitable you are, how well you are coming. There is a sea change. 5 years ago, they were looking at how much loss you make. Is it correct? Ashish, you are getting more valuation when you are saying they are how much loss you are making, so we'll give you more money. But now they ask, what is your profitability before we give you money? So investors' outlook also has undergone a complete change, and rightfully so, because capital cannot be continued to be pumped in a loss-making business. Initially, everybody realizes that 3 years, 4 years is a time to build up, but at some stage, you have to turn profitable. So I think regulation, absolutely no issue. It has to be a well-regulated system, which will give more comfort to the investors, whether domestic or overseas. If the system is well-regulated, you are compliant, you are not in FATF list. So these are all conducive to attracting investment. The profitability of the players over a reasonable period of time, so that the investors get a good return on their capital, that is also to be parallelly ensured. And if we do that, then I have absolutely no doubt that given the size of our market, it's a well-regulated market, why should it not attract the kind of investment which our country deserves?
No, very valid point, sir. And in fact, Ashish, you were talking about, you wrote an article 5 years back, right? And you made a bold claim about what the fintech world would look like. And in a way, even that bold claim looks to have been significantly beaten, right? So what next, if you were to write that article now?
Look, I think the Indian fintech ecosystem went through this phase of what I would call expansionist thinking, and Rajnish sir was referring to some of this, where companies were spending disproportionate amounts of capital in the hope of gaining market share, with the hope of upselling many other products over time. I think we are now entering a phase where everybody is recognizing there are a few things we are good at. and this, we will do everything for consumers or everything for MSMEs. I think that approach is being questioned and being relooked at. So I do think as larger fintech companies are focusing on a few things, it is leaving room now for many new companies to come in and capture the gaps that they are leaving behind and serve consumers for those products and services. So that's one, I think, dynamic which will play out over the next few years. I also think that companies are expanding the scope of or the range of the canvas they were painting on. So if you look back 10 years, much of the innovation was happening in the payment space, and that's where a large part of the technology kind of drive happened. It's only been in the last 5 to 10 years that credit has come on the bandwagon of technology innovation. And then now we are seeing many other segments of financial services come under the technology bandwagon. We are seeing so many new attempts being made by entrepreneurs in areas that were hitherto not available to them, be it in banking infrastructure, market infrastructure, wealth management, so many new areas. So I think entrepreneurs are expanding the canvas of the painting, and that is a very exciting phase for us as investors.
No, it's amazing, and you see, India has seen real growth. Our economy. Time up is. I think. Do we have time for 2-3 questions? We have. Okay, 5 minutes. Yeah. So I'll just then quickly conclude before we then give it to the audience for a few questions. But India is seeing real growth. Our economy is doubling, and I think in the next 5 years we'll cross $7 trillion, maybe $10 trillion by 2030. And with one of the most forward-looking regulators in the financial ecosystem, this sector is going to be growing multifolds from the real economy. So it's a great time to be in India, to be building something in the financial services ecosystem. Maybe 2 questions? Yeah, please.
Hello, Kavya from Entrepreneur Magazine. As you said rightly that entrepreneurs are expanding the canvas. I wanted to know what are some startups that you feel are really dominating the sector currently and you have your eye on.
There are so many. I'll do a grave injustice to name a few. Himanshu is sitting here from Progcap, and I think this is a company which is doing wonderful work in expanding the access of credit to MSMEs in the country. We are shareholders in several payments companies that I talked about. One company which you will hopefully see during GFF is a company called I Global that we are investors in, which is really enabling the success of cross-border payments in India. There's a mandate by the regulator and the government to enable superior cross-border payments, and companies like them are enabling that. We are investors in companies which are doing lots to enable merchants sell online better, to check out and working capital financing. So there's GoQuick is an example of a company that is doing well in that segment. But candidly, we are while we are investors in several of these companies, there are so many young entrepreneurs we meet. I find I have one of the more enjoyable jobs in that founders who have these world-changing ideas in financial services and outside come to us and pitch these amazing innovations and companies, which candidly is very hard for us to think first principles. But there's tremendous innovation happening, and I'm sure there are many entrepreneurs present in this room and outside who are powering these. But anything to add?
Perfect. Thank you so much, everyone. Thank you.
Thank you.
Thank you.
Thank you.